Hi, so the results for the Treasury bonds for September auctions is out. Today, I would like us to go through these results so that we can ascertain whether there's still a demand for these government papers or people are now shying away from them. And we are going to go through why people will be shying away from the papers or why people will still be finding them attractive. Now, the papers which were on auction were FXD1 2024-10, which had a tenor of 9.5. Its coupons were being paid in September and March, and it carried with it a coupon rate of 16%. The other paper, FXD1 2016-20, had a tenor to maturity of 12 years. It carried with it a coupon rate of 14%. Now, when you were going through these, I don't know if you remember me telling you to go for the high coupon rate because their tax rate were also the same, both at 10%, yeah? And the coupon payment dates were also the same. So whenever you have a chance for a higher coupon, you always grab that, yeah? At the same time, this 2024-10 is a shorter paper as opposed to the other one. So I found it more attractive as opposed to the FXD1 2024 than the FXD1 2016-20, than the longer paper. So how did these papers perform? Now, the FXD1 2024-10, which has 16%, received bids, listen to this, 13.3 billion. The other paper received bids of 9.2%. Like I told you, whenever you are presented with a chance to earn more, always go for the higher coupons, okay? Always go for the higher coupon. Number one. Number two, the FXD1 2024 had a shorter term to maturity. So if you can earn higher within a short duration of time, always go for that one. So I found it more attractive, and I like that even other investors found it more attractive. Now, this one, people placed bids of 44.6% of the amount that the government was looking for. CBK was seeking to raise $30 billion shillings. I don't know where I'm getting the dollars from. 30 billion shillings. And out of that, 44.65% was subscribed under FXD1 2024-10. That is 13.3 billion. And the other paper, we had subscriptions of 9.2 billion. That makes 75%. Actually, in my opinion, I wasn't expecting this level of performance. I was expecting some kind of underperformance. And I'll tell you why I was pessimistic this time. Now, the competitive bids for the 6.5 billion. All right. Non-competitive bids, now people like you and I, placed bids of 3.3. And the other paper, they had a cumulative bid of 1.1 billion. All right. Now, because these were reopened papers, the coupon rates remain the same, but the market weighted average rate for the 2024 paper, the 16% coupon, is at 16.97%, and the other one is at 17.34%. Now, where I want you to look at price per 100 shillings at average yield. Now, if you put a bid for this paper, of course, CBK is advising you on how much to pay, but for every 100 shillings on the FXD1 2024-10, you will be paying 95 shillings. For the other paper, you'll be paying 83 shillings. So if you had put a bid of 100,000 shillings, you will be remitting to CBK. It's being sold at a discount, yeah? You'll be remitting to CBK 83,000 shillings. However, at the time of maturity, CBK will pay you back 100,000 shillings, even though you are remitting to CBK 83. Of course, plus accrued interest, yeah? Now, at the same time, your coupons will not be paid on the 83, on the actual amount you're remitting to CBK. Your coupons will be paid on 100,000 shillings, your exact bid amount. So why do you think that that CBK did not manage to raise the $30,000, 30 billion shillings, I'm sorry about the dollars, the 30 billion shillings that they were looking for? Why did they receive 22 billion shillings, which is 75% of the amount they were looking for? Now, if you remember, there was an IFB which were issued in August. And we have been speculating the release of that IFB in April, in May, in June, in July. We have been expecting CBK to release IFB, not just to release an IFB, an infrastructure bond, which is tax-free, but also to issue a new paper. Now, what CBK has been doing is that they have been reopening papers. And why do they keep reopening papers? Because they have been working towards maintaining the interest rates. When they issue a new paper, they give us a chance to bid competitively and to dictate the rates. Yeah. Now, by the virtue of the fact that CBK reopens the earlier papers, now those are being reopened. Retail investors like myself and you will be buying those at the rate or at the coupon rate at which they were first issued at the onset, when these papers were first auctioned. When a treasury bond is reopened, and you put your bid, you will be paid coupons at the exact rate at which the people who invested in it at the first time are being paid at. So if you bid 100,000 now, or if you bid 1 million now, and somebody else had placed their bid of 1 million, had invested 1 million in this paper back in 2016, come September and March of every month, even though right now interest rates are 18% or 17%, you will still be taking this bond now at that 16%, at the 16% or 14%, which it was issued at back in 2016. So when a paper is reopened, the coupon rate remains the same. The terms of that paper remains the same. The only difference that you might have is you will be compensated for the prevailing market rates. Now, I'm trying to break this down to you so that you can easily understand it, yeah? Assuming in 2016 rates were 14%, and now the market rate is at 18% or at 17%. In 2016, the paper was auctioned at 16%, and now the prevailing rates, the treasury bills rates now are at 18%. As an investor, which paper will you want to go for? Will you want to buy a treasury bill now, which will pay you 18%, or buy a treasury bond now, which will pay you 14%? Certainly, you will want to go for the treasury bills, the prevailing market rates, which will give you 18%. Or you'll want to go to the bank where deposits are now at 18%, because the bank deposit rates and the treasury bills are always almost at par. Yeah, the differential is not so high. So to compensate you for that variance in interest, your paper will be sold to you, your current investment now in 2024, in the treasury bond, which was first sold in 2016 at a rate of 14%, will now be sold to you now in 2024 when the rates are now at 18% and not the 14% at a discount. Now, the reverse of that is also true. If back then treasury bonds, the coupon rate was at 17%, and now the coupon rate are now at 12% at the point when you're now investing, you will buy whatever you will be investing, you'll be buying your treasury bond at a premium. So why will this be having an under subscription? Why do you think what would make CBK get 75% and not 100% or more? Yet in August last month they had an oversubscription. Now, like I have said, if you remember, we had been expecting IFBs back in March, April, May, June, and then there was an issue in August, and there was an oversubscription. So most people who are speculating for an issue of a new paper or for an IFB invested in August, specifically the retail investors. The institutional investors, of course, they have their periodic investment, whatever. They can invest periodically. But the retail investors like you and I, who are waiting, who have been speculating for an IFB, had utilized their monies, their savings, to take up the August paper. So certainly there would have had to be an undersubscription in this paper. However, if this was a new issue, or if CBK was to issue a new auction, a new paper, where now we start bidding and demanding for higher rates, there has been a quote-unquote tug of war between CBK and investors. Investors, especially the competitive investors, they have been bidding, asking for high rates, and CBK does not want to give them that high rate because they want to manage the interest rates. Remember, when the bond rates goes high, go high, it means that even the treasury bills rates will also, people will be quoting higher. And when treasury bills are quoted higher, people will remove their deposits from the banks, from the banking sector, or from MMFs, and take it to the higher bills or the higher bonds. Now, for MMFs to maintain their deposits, or for the banks to maintain their deposits, because they need money to be in business, they will increase their deposit rates. And when they increase their deposit rates, remember, banks are in the business of buying and selling money. So when they start buying these monies from you at a higher rate, because they're luring you back from investing in CBK or from removing your deposits to take to CBK, the loan rates will go high. Because they are now buying deposits, banks are now buying deposits at a higher rate. They are buying money at a higher rate. And every business person will always want to buy low and sell high, so you're able to make a profit. So if the treasury bills or the bonds rates were to go high, investors will want to transfer their deposits from the bank to these high rates, because every investor always wants to get higher return on investments. Now, for the bank to stop these guys from moving their monies to the government securities, they will increase their rates to make the bank deposits more lucrative or more attractive. Remember, the bank deposits have the advantage of liquidity, So banks will increase their rates so the investors can have some deposits still staying with the bank. Now, when the banks increase their rates, banks are in the business of buying money and selling money, receiving deposits and giving loans, receiving deposits and investing. So if once the banks have increased their deposits, the resultant effect in the industry is you'll start seeing banks increasing their interest rates, because now their stock, quote unquote, which is money, has now been bought at a higher price. Their cost of funds is now higher. All right? So then they'll have to sell these higher deposits at a higher rate. So we'll start seeing banks increasing their interest rates. And what happens when interest rates goes high? It's possible for people to start defaulting. Lending becomes more difficult. Access to credit becomes more difficult for for business people. And when you can't access credit for your working capital, when you no longer can't afford credit for your business, for your importation business, or for whatever business it is that you're running, then the economy starts to struggle or starts to underperform. Now, to stabilize the economy, that is why CBK has been working so hard to maintain the interest rates. Were it not for CBK's efforts, trust you me, believe you me, the rates, the direction that these bonds were taking from 2020 to 2023 and even now, we would have been having bonds being issued at 25%, and we'll be seeing interest rates, banks lending at 30%, and things will just be difficult. Inflation will be something else. Okay? Now, to manage inflation, to stabilize the economy, CBK has to work towards managing the interest rates in the economy. So that is it for today's. That is it for today's. I really needed you guys to understand why we'll be having an undersubscription, so that you don't panic thinking that investors are shying away from investing in government securities. No, don't be a pessimist. I'm going to remind you to please press the subscribe button if you haven't subscribed. And we have a date on Saturday at 2 p.m. We will be going live